Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top events that are currently moving prices. We'll take a sneak peek of the economic calendar, try to understand the top events. And then after that, we'll do some technical analysis to try and understand the current market structures and where potential market opportunities may lie. So as always, I would like to begin with a disclaimer that this session is not investment advice. It is not a recommendation to trade, so you should always do your own due diligence and of course practice proper risk management. So good morning everyone, and shout out to Paul Carey for being the first person to join and comment in the live section. So let's get it started. So first of the highlights in the market right now is one, EU car registrations extend decline. In this case, we have seen passenger car registrations in the EU shrinking by 3.4% year over year to 853,670 units in February 2025, following January's 2.6% drop. Germany and Italy saw the sharpest falls. Year-to-date registrations fell 3% compared to the same period in 2024. So on other highlights, Sweden producer inflation edges down to 3.4%. Turkish business morale at 10-month high. European markets head for our open. Finnish jobless rate rises to 9.4% in February. Japanese yen holds losses against strong dollar. Hong Kong equities under pressure. So this seems to be the top highlights in the market as of this morning, and we'll be covering a lot more to try and understand what's moving the markets this morning. So if I had to choose one thing that is currently moving the markets, then that would be the US President Donald Trump. So let's see what he has in store for us this morning. So Trump walks back reciprocal tariff threats. So the president says some countries could be excluded from tariffs set for next week. So remember, he promised April 2 tariffs that are bound to impact almost every trading partner with the US. However, last night he walked back the talk and decided that there would be some countries that would be excluded, and this was a big relief in the market. So President Donald Trump said on Monday he may give certain countries breaks on reciprocal tariffs, which are expected to be implemented on April 2. The White House is also reportedly looking at limiting the sectors that will be affected by the reciprocal tariffs. However, Trump said that additional tariffs on cars, pharmaceuticals, lumber, and semiconductors will be announced soon. So April 2 is the next big tariff deadline, but as with similar dates in the past, it is unclear what will actually go into effect that day. Reciprocal tariffs are set to be implemented next week, according to prior announcements from President Donald Trump. However, on Monday, the president said that not all countries would be subject to these import taxes. I may give a lot of countries breaks. It's reciprocal, but we might be even nicer than that. You know, we have been very nice to a lot of countries for a long time, Trump reportedly said at the White House. So kindly give me a sec. I need to address the noise on my background. Apologies for that. I had to address the background. It was a bit too much. So let's get back. So reciprocal tariffs on foreign goods would match those imposed on US exports. For example, if items from the US were taxed at 5% rate, when sent to the UK, items from the UK would also be taxed the same at 5% as they come to the US. So this has been a major threat. Out of traders and investors were concerned that this would cause a big shift in the markets, especially on the material day of April 2nd. So these concerns had driven out of investors to go for safe haven assets. So that's why we saw gold breaking into new all-time highs, but now we are seeing gold taking some steps backwards as the policy stance on the April to reciprocal tariffs goes a bit lower. So that is the current biggest mover in the market. And now if we check the economic calendar, we'll notice that the calendar is a bit thin today. We don't have much happening today. So first, we'll be looking at the German IFO Business Climate Survey. This will be coming up at 12 p.m. Then later on, we'll be getting the housing data from the US at 4 p.m. This will include the Case-Shiller Composite 20 Housing Price Index, as well as the official housing price index for the US. So overall, for the Case-Shiller, we're expecting a slight uptick to 4.6%, meaning that the housing prices are increasing. On the other hand, for the official housing price index, for the prior month, we're expecting a 0.2% increase, which is a slowdown from the previous reading where we had a 0.4% increase. So later on at 5 p.m., we'll be getting more data for the US economy. One will be the Conference Board Consumer Confidence Survey. So in this case, we're expecting a slowdown from 98.3 down to 94.2, possibly because of the tariff threats. Then we will be getting the new home sales data, where we're expecting an uptick to 682,000 homes sold in the prior month compared to 657K in the previous one. So we'll also be getting the Richmond Manufacturing Index, and we're expecting an uptick to 8, up from 6, where 0 is the marker between contraction and expansion. Then later on, the last news item will be a speech by German Buba President Nagel at 7 p.m. So fast forward to Wednesday, before we get to the next market snapshot live session, we'll have more data coming in from Australia's CPI, where we're expecting a 2.5% increase in inflation. Then for the UK, we'll also be getting CPI at 10 a.m., and we're expecting that their inflation slowly dropped from 3.0% down to 2.9%. So core CPI for the UK is expected at 3.6%, and this is a slight drop from the previous reading of 3.7%, whereas the retail price index, we expect the same number of 3.6%. So overall, this will be a key driver of the UK pound, with a focus on the Bank of England monetary policy. So the Bank of England monetary policy, they have been cutting rates, but so far they have held at 4.5%. And in this case, we'll be watching the inflation closely, because if inflation is behaving as expected and it's moving towards the 2% target, then this would allow the Bank of England to continue cutting rates, and that would be negative for the UK pound. On the other hand, if we happen to see CPI at 3.0% and higher, that would mean that inflation is still a much tougher job for the Bank of England, and as a result, we could be seeing the Bank of England holding rates higher for longer. So in that case, we would be seeing a pound that is strengthening. So the rest of the news will be covered tomorrow at the Market Snapshot series. That will be past 11 a.m. So for now, let's focus on today's movers. So one of the key highlights as per yesterday's trading, Tesla stock surges nearly 12% to lead Magnificent 7 stocks higher as tariffs worries ease. So Tesla stock led gains among the Magnificent 7 on Monday, surging nearly 12% amid investor optimism that President Trump's tariff plans may not be as wide-reaching as previously anticipated. Reports that Trump will hold off on bringing in levies from the auto sector on April 2 eased worries that Tesla's bottom line would be impacted. So now that we are not expecting Trump to implement tariffs on the auto sector, one of the companies that really benefited with a big bounce was Tesla, which was up 12%. Shares of the EV maker had already been on a downward trend amid concerns of a drop in sales and a backlash against the brand of a CEO Elon Musk's involvement in politics, especially the Department of Government Efficiency. So the stock began digging out of its most recent dip last week when Tesla revealed plans to launch its robotaxi service in 2025. So on Monday, the electric car maker responded to complaints about a pause in its full FSD in China, saying it will release the features once regulatory approval is secure. So last Thursday, CEO Elon Musk held an impromptu company all hands, giving an update on the progress of a number of products, also attempting to assuage fears that he wasn't ignoring his post. So the electric vehicle manufacturer sales have slipped recently in key regions like Europe, China, and even the US. So not only has the changeover to the new Model Y SUV been seen as a drag on sales, but Musk's closeness to President Trump and embrace of right-wing politics may also be impacting the brand. So right now, Tesla shares are down roughly 31% year to date. At some point back, it was down about 50%. So this is a big improvement. We are seeing a recovery, and the recovery can be seen across board, where a lot of stocks made some good recovery yesterday. So if you go to FinViz and you look at the stock map as per yesterday, you'd notice the same. So this is how the stocks closed yesterday. As you can see, for the top tech companies like Nvidia up 3.15%, Microsoft was up, Amazon 3.59%, Tesla 11.93%, Meta 3.79%, Google 2.21%. So all these major companies made some good recovery yesterday, and perhaps we could be seeing a continuation of the same today. So major stock market indices like the Nasdaq and the SP500 are expected to be making a recovery further today. So we'll be watching that closely, especially closer to the New York Open. So on the currency side, there has been quite a number of things happening. One of them is the Japanese yen being the biggest mover this morning. So it's slightly up 0.04% against the dollar, but then the dollar is currently the strongest currency in the market, having made a very strong recovery against other currencies, with the biggest gain being against the New Zealand dollar, which is down 0.28% since the day started. So as for the week, and I'm talking about now Monday and Tuesday, the dollar is still pretty strong, with only the Australian dollar and Canadian dollar having a slight gain on the dollar, with the biggest loser being the Japanese yen, which is down 0.9% since the week started. So if we go to month to date, or since the month started, you'll notice that the US dollar was pretty weak, and a majority of these currencies were making big gains against the dollar, with the biggest gain being the euro, which was up 3.9% against the USD. But now, as we get into this new week, we are seeing a lot of changes. The dollar is making some form of recovery. So I'm trying to see if there's anything else I missed. So far, I don't think there's anything else I missed. I believe it's time we do some technical analysis and try to understand where the markets might be headed next. So this is the MetaTrader 5 trading application. The very first chart you see here is called XAUUSD, short for gold. So also a quick update, FX Pesa has revised its spreads on gold and made them a little bit more tighter. So right now you'll be able to trade with a spread of about 11 cents or basically around 1 pip. And this is a big news for the market. So now we have the best spreads in the market, and you can check it out on your MT5. So from what we are looking at here, this is the 1 hour time frame on gold. So clearly, we have had 4 consecutive days of gold hitting lower heights, and that is true even this morning. We have also seen the market going for lower lows, save for yesterday. Yesterday, we did not break the lowest price that we had seen on Friday. So there's still more room for downside. So if you check here, you'll notice that the market is maintaining this bearish momentum. So anytime we get to this particular trend line, we have seen the market moving further back downwards. And that is playing out as through as of this morning. And we could be seeing the price dropping further down towards around the $3,000 price level. So gold could be going back to 3,000 as we saw it attempting yesterday and also on Friday last week. So good chances that we get to see gold retesting here. So also, if the alternative happens, then we'll be looking for a potential break of the upper trend line. If that happens, then we get bullish. But for now, the consensus is that gold remains bearish. So on the dollar index side, this is the 5th consecutive day of the dollar making some strong recovery. So you can see first time, second, third, fourth, and now the 5th day of the dollar index making recovery. And that can be seen across major currency pairs. So for instance, if you begin with Euro USD, you'll notice that after the strong rally that we saw lasting several weeks, now we are seeing the market changing direction. So we projected the double top formation and we identified here a very nice trade for the completion of the double top. Then Friday and Monday, we didn't have much. So it was only in Monday evening that we eventually saw this breakout. So if this was our neckline at 1.0825, then there was an attempted break on Friday, but the complete break happened yesterday. And now we are looking at a continuation of the bearish momentum, the market having changed direction. So in this case, there's still more room for downside given the strong bullish momentum we had seen here. So if we happen to break below this, then there's a good chance that we'll be going for the day's open. So this was the day's open on the strong rally towards this level. So now if we happen to break, then we could be seeing a potential free flow down to 1.06238. So as for pound USD, we're also seeing the same. There was a very strong momentum here. We expected the market to retest the previous day's high. After we got to this, there was an instant rejection and the market changed direction. And now we know there's a good chance that the market is headed a bit lower. So the most recent low on pound USD was 1.28615, which basically implies that if the market breaks below the current level, then we are going for 1.28615, given the strength of the dollars of the movement. So for AUD-USD, it's really struggling to maintain. From the forward chart, you can see it's a bit of a struggle to break below the current levels. So if you were to remove everything from this chart, then you would notice it for what it is, a market that is really not making much of a progress. So if you go to the 15 minutes chart, then you'd notice that this has been the price action for the last 2 days. And then from the lower side, we can say that this market is maintaining these two particular lines, which means that the average price action movement for the last 2 days has been more of a sideways, which means that there will be opportunities on the break, but we don't have a breakout yet. So for USD JPY, very clean break out of this channel. We traded this channel for a while as the market continued moving downwards. So on Monday, we identified that the market had pulled back to this particular trend line. So we expected a continuation of the same. So it played out as expected, though with a pullback here and then further movement up. So this was, on Friday. So on Monday, this is when we completed the move. And today, after breaking this resistance, it seems more likely that the market is taking some pullback, but might continue in the same direction. So there's still more room for upside. Of course, we could be seeing the market retesting this area here, 151.278. Remember, yesterday our target was 150. So these pullbacks may present some nice buying opportunities, especially if the market was to pull back to this area and then bounce from this area and move higher. That would be a nice entry on the pullback. So it would be similar to what happened here on Friday. Market pulled back and then continued in the same direction. So for the Nikkei 225 index, we projected a breakout here and a run towards the previous high 38,134. So it played out as expected. Market pulled back, and now we'll be looking at a potential continuation after we have retested this particular trend line here. So on gold, we have already projected that the market might be headed lower, but then we will be observing this area here for potential liquidity grab before the market makes another move. So for UK oil, we had a breakout and then a consolidation here, and then another breakout yesterday, and today we are seeing a continuation, which implies that oil could be headed much higher. Of course, the most recent high is around 73.271. So if the market extends the bullish momentum, then we could be seeing another test of 73.271 price action level. So on US equities, a very, very strong bullish momentum yesterday, which continued from the Friday's price action, indicating that now the market might be headed higher, but for now we are seeing some form of pullback. So we could be seeing a pullback, maybe retesting the previous high, and then a continuation of the same. So the idea is to buy the pullbacks. So the market is still bullish and making a very strong recovery. So if you're on the daily time frame, you will notice that we made a very strong rally yesterday and closed the gap that was left here. So if you zoom on the Nasdaq, you'll notice there was a gap here and the market eventually closed the gap. But then there's still more room for upside as the market continues to recover. So in this case, even if we are seeing a potential break towards the lower side, the idea is to be looking for bullish positions, not bearish positions. So for now, if you narrow it down to a smaller time frame, let's say the 15 minutes chart, then you check this area here, it's more of a consolidation, but we'll be seeing momentum later in the day. So I'll be expecting to see some further upside riding on the strong bullish momentum that we experienced yesterday. So for US 30 or the Dow Jones index, we're also seeing the same. So nothing much has been happening since the market opened, but at some point we'll be expecting to see volatility and a continuation of the bullish momentum that we saw yesterday. So we'll be monitoring closely to see if there's any opportunities or evidence of buyers coming back in. So it's the same thing for the SP500. If you go to the 15 minutes chart, you'll notice that we don't have much happening here, but yesterday was a pretty cool bullish momentum. So we continue monitoring the range, waiting to see evidence of buyers coming back in, and hopefully you'll see opportunities there. So as for Bitcoin, we are seeing much progress from previous price action. So in this case, an attempt to recover from a recent sell-off. So now after the big bullish momentum yesterday, we are seeing a pullback. So clearly, if the market was to do this, then the idea would be to buy the dip and enjoy as the market remains in this pattern. So as for New Zealand USD, we are seeing attempts to break lower. So in this case, we already have a pattern. The pattern is emerging along this line here. So anytime the market gets to that area, we are seeing more pressure to move towards the downside. So from the 1 hour time frame, we are on the verge of a breakout. Key level that the market has been unable to break, and if we happen to break that, then we could get to a support level of 0.56823. So that hasn't played out yet. So the market is really struggling with breaking below yesterday's high, but it seems likely that the market will eventually break. So silver is making a comeback after the big sell-off yesterday in the afternoon. So in this case, attempting to make some form of recovery after the 4-day sell-off. So we are currently moving towards yesterday's high. So we'll be looking at the retest of this area and see if the market will be dropping further back down or whether it will be pushing higher towards 33.566. So the key area is yesterday's high around 33.294, where we'll be observing for signs of sellers coming back or buyers driving prices higher. So outside of that, we have the EU50. The EU50 is the Euro Stocks 50 cash index. So it's persisting on making a bullish momentum after the big pullback we saw over the last 3 days. So today seems a bit bullish after the market failed to break into a new low. We could be seeing this relationship between US and European equities extend for the day, and we could overall see a net positive day as we continue. So German stock market index also recovering from early morning sales. So clearly we could be seeing more upside. And Spanish stock market index also gunning for a new all-time high, similar to what we had yesterday. Then we have funds also making an impressive comeback from yesterday's sales. So more likely that we could be seeing far more upside after closing the weekend gap. So this is the gap that we saw over the weekend. So on Monday we opened with a higher price, market closed the gap, and now it seems likely that we are moving higher. So for pound yen, we're also seeing a potential break towards the upper side after the market really struggled along these areas here. So clearly unable to move further downwards, and now we are seeing the pound attempting to break towards the upper side, which would lead to an acceleration higher. And this would apply especially if the yen was to remain weak. So as for USD, trading against the Canadian dollar, it's still in a kind of triangle setup. So meaning that the momentum hasn't been all that great. So from big moves to big moves and then smaller and smaller, meaning that the volatility is thinning, and at some point we should be expecting to see some form of breakout. So that breakout could be happening today or even tomorrow. So we continue monitoring the chart, waiting for the eventual breakout. So that being said, I don't think we have anything else. So I would like to thank everyone for joining the session and for your participation. Let's check on the comment section for any questions before we hit the end of the session. So morning, Robert Kavare, Rono, Vic, Margaret Para, Edmund, Abraham, thank you guys for joining. Ken Moneki, Wangari, Toms. So let's see the first question. How do you choose and determine the best pair to trade? So clearly, this really depends on the strategy that you use in trading. So some people prefer, let's say, more volatile markets. Others prefer less volatile markets. So I know there are gold traders in the house. There are people who prefer trading Euro USD. Others prefer trading indices. So it really depends on your approach in the market, what defines or justifies an entry or an exit in the market. So also, some traders prefer trading specific patterns. So they might consider, let's say, scanning through different markets, looking for the right pattern. And once they identify it, then they can justify a trade. So clearly, the best pair to trade is basically dependent on which strategy you are using in trading. So a good question, does the news price on gold update automatically, or how does one take advantage of the same? They apply automatically. So if you are on a premier account trading on MT5, then it should have reflected to all clients at the same time. So that basically will be great for you. So as we continue, I would also like to highlight that we have a number of events coming up. One of them is coming up this afternoon. It will be a Twitter space, so where we'll get to talk about a couple of things. So just want to introduce this to you guys. So love is sweet, but have you checked your M-Pesa balance? So tonight at 7:30 p.m., myself and Kahome Steve will sit down with Barak. Barak is the host of Financially Incorrect podcast. Julia Gaido, she's the host of the So This Is Love podcast. I will get to talk about love and money ahead of our oncoming event on 29th. So if you haven't booked a ticket, make sure to book. And one ticket is going for about 2,500 for early buyers, 3,500 at the gate. But if you join the Twitter space, there's a good chance you'll get a really good discount. And you can grab these and make sure you enjoy the full festival. So outside of that, we also have a new episode of the Bullish Banter podcast. A very interesting one. I would really highly recommend that you check it out. So I'm just opening the podcast, a highlight. So this will be our latest episode, and it's our 70th episode since we started the podcast. So in this case, we host a very I would say a very informed guy when it comes to macro. His name is Dominic the Austrian. We cover various topics, especially terms actions, their impact on the markets, Bitcoin, as well as the global economy. So if you haven't checked it out, make sure to check it out. And if you enjoy the podcast, please share your reviews, like, and subscribe to the channel. So that's it for the day. If you don't have an account, check the links in the description below, register for a trading account, and visit the FX Pesa YouTube channel for beginner classes. All you have to look for is Novice to Pro series, and these will help you transition from a complete beginner to at least an intermediate trader, and with practice, eventually you become a pro level trader. So thank you guys. Thank you for your time. I hope to see you on the next session.